So today we're going to be talking about how do you qualify for a home loan? Woo! Okay, this is the one you guys have been waiting for. Let's talk about this because it is so important that you guys understand what the banks are looking for in order for you to qualify for a home loan, which is also called a mortgage. You need to make sure that you have good credit. Even if you don't have good credit, there's other ways to get around it. But let's talk about people that need to have good credit. All right, so first let's look at the credit. Your Beacon score, if you're in the US, needs to be 740 and above in order for you to qualify for any of their extra programs that they have, like the FHA loan. Now in Canada, you're required to have a 680 plus Beacon score. Make sure that you have 2 trade lines. Trade lines are actual like credit cards or like a loan in a credit card or a student loan in a credit card or a car loan in a credit card or whatever it is, 2 car loans. Just make sure you have a minimum of 2 trade lines for 24 months. Okay, so 24 months, 2 trade lines. That is the requirement on credit. Now, make sure you don't have any delinquencies. And if you do, these things stay on your credit for 7 years. So you can't really get rid of that if it's there. Your goal is to ensure that you continue to make your payments on time and that you are being consistent in monitoring your credit. I've already mentioned before in other videos that you should be monitoring your credit either on Credit Karma or Borrowell so that you could actually see what's going on, but always use a free platform. There you go, guys. I just saved you $9.99 a month. All right. So don't go spending money on credit monitoring because there are enough free platforms out there for you. All right. So credit is the first thing. The second thing you're going to need to have is income or an employment. So for instance, banks are really looking for individuals who have at least a 2-year, 3-year history in their job or in the same industry. So even if you've left your job and you've moved to a different job, as long as it's within the same profession or same role title, that's what the lender is really looking for. Okay, so really important that you are stable in the type of job that you're doing. They love to see stable history with your employment and that you have enough income to actually cover the required payments on a monthly basis or bi-weekly basis, depending on what your payment terms. The third thing I want to mention is your tax returns. So if you're going to be purchasing a property, I would highly advise that you make sure that your taxes are in order before you actually do that. Sometimes we have people come to us and then they're like at the 9th inning, they are trying to file their taxes. Please make sure your taxes are done before you actually apply for the mortgage so that we can see what's on your notice of assessment, because sometimes you say one thing and then on the notice of assessment, it's different because there's been like write-offs or whatever it is. But on line 150, if you're in Canada, it's going to tell you the exact amount of income that the banks will be using, and they're going to be taking a 2-year average. So for instance, 2020, I may be aging this video a little bit, but that's okay. So 2020 and 2019, they would take 2 years and look at the average. So if you made 50,000 in 2019 and then you made 100,000 in 2020, that means your 2-year average is actually $75,000. Okay, so that would be the income that they're going to be using, not the actual income that you have on your job letter. They want to see 2-year average, especially if you've changed jobs, all right? Sometimes we can get around it, but just make sure you have your taxes completed. If you have any questions, always just drop a comment. Thank you for watching. If you'd like to see more of these types of videos, head over to my YouTube at Samantha TV, my Instagram, I am Samantha Brooks, or head over to my website for more information at samanthabrooks.com.